There we go. Good evening, everyone, and welcome to another masterclass. So tonight is titled The Scalper's Code, Mastering Precision and Discipline in Fast Markets. So in today's world of high-speed trading, scalping is both an art and a science. It demands mastery over execution, emotion, and adaptability. So whether you trade gold or indices or currencies, whatever your instrument of choice is, this session will equip you with a clear framework and the mindset required to excel in fast-moving markets. I'm also going to cover a trading strategy on how to scalp trade, and obviously it's going to tie in very nicely to the entire series that we have been on so far the last couple of weeks. I see a tremendous amount of people already logging in. Thank you. Welcome. Please remember to click that like button, subscribe, and comment. Interact in the comment section. And if you do, you could be the lucky winner of a $50 funded account. So, yes, obviously in every single masterclass so far, we've given away a $50 funded account to one lucky viewer. So please interact in the comment sections. Good evening, Francois. Good evening, Stephen. Welcome to the session. Glad to have you here. And yeah, anyone else, please remember, if there's any question you want to ask during the session, please pop it for me into the comment section. I'm also going to be asking a couple of questions, so please interact with me as much as possible. And yeah, let's have some fun tonight. So, before diving in, we need to understand the following. Scalping is not about guessing or gambling. It's about precision. It's about the process. It's about psychology. Every tick matters when we start talking about scalping. Every decision counts, and every second tests your discipline. So let's get into the nitty-gritty and, let's explore what it truly means to master the scalper's code. But before I forget, please just familiarize yourself with the disclaimer that is currently on your screen. This basically, in short, just states that everything that I'm going to be covering during tonight's session is for informational and educational purposes, and I'm not giving financial advice. Okay, so as long as we are all clear on that, then this is going to be an absolutely amazing session. I do see I have a few more comments from Mr. DC. I hope I pronounced that correctly. Gavin and Willie. So welcome all of you to tonight's session. And yes, I have a question. And obviously remember, if you answer the question, you stand a chance of winning this check. Okay? So, how many of you consider yourself short-term traders? And how many of you here today are primarily day traders or swing traders? So, if you're attending the session here today, or even if you're watching the recording, put it for me in the comment section. Do you consider yourself a scalp trader, or do you consider yourself a day trader or a swing trader? Let me know. Let's kick off tonight's session by just exploring what scalping is. Now, scalping is a trading style designed to capitalize on small market movers. Now, trades typically last anywhere from a few seconds to a few minutes. So instead of aiming for large profits as scalpers, we focus on smaller, more frequent trades. Often, 5, 10, or 20 pips at a time, and repeated with precision and consistency. Now, the power of scalping lies in compounding. 10 disciplined small wins per day are far more powerful than one reckless large trade. But to achieve this, you need structure. You need emotional balance. Now, this is why scalping begins with a mindset. Okay? When you're in the market, you'll find yourself that, time slows down. Every second feels amplified. Your ability to think clearly under pressure determines everything. A scalper must learn to be reactive without being impulsive. When price spikes, you observe. When opportunity appears, you act. The secret lies in, trusting your preparation and not your emotions. So think of scalping like being a pilot. You can't hesitate mid-flight. You rely on your checklist, your procedures, and practice emotion where your emotions, if I can put it in such a way, your emotions are, again, using the pilot analogy still, your emotion is like turbulence, okay? And your trading plan, your structure is what keeps you steady mid-flight. And I do love the amount of messages I got earlier. Looks like the majority of the people here tonight are all scalp traders. I have one day trader, so welcome to the day trader. I hope maybe today will convert you. I don't know. Maybe today will convert you. But I'm definitely seeing a bunch of scalp traders. So, talking about emotions, what do you think is harder to control? Your emotions or your trading plan? Let me know. So, in your opinion, what is harder to control for you? Your emotions or your trading plan? Now, I said in the beginning that we are going to be discussing the scalper's code. Now, for me, the scalper's code rests on 3 unbreakable principles. What may these be? Now, these 3 unbreakable principles are precision, discipline, and consistency. Let me do that again. It's precision, discipline, and consistency. Now, when we discuss these various areas, precision means only trading high probability setups, the ones that meet your criteria perfectly. Number 2, which is discipline, means we follow our rules, even when the market tempts us to do otherwise. And then lastly, consistency means executing your plan the same way every single time. You see, traders, mastery doesn't come from complexity. It comes from consistency. Repetition done correctly becomes instinct. And instinct executed under pressure becomes mastery. And now I'm going to start tying in the trading strategy. So let me put this way up until this point. If there is any questions that you would like to ask me about anything that I've covered so far in the last 10 minutes, let me know. I do see I have some answers here. Definitely emotions. Okay. Now, over the last couple of weeks, we've spoken a lot about smart money concepts and market structure and so forth. And we're going to continue that conversation today now. But today we are going to focus on using those principles in scalp trading. So short-term trading when we are looking at the markets. Now, to scalp effectively, you must understand market structure, the roadmap of price movement. Now, with smart money concepts, structure tells us where liquidity is positioned, where institutions are active, and where price is likely to react. Now, smart traders understand that markets move to grab liquidity. They move to get those stop losses above highs and lows before moving into the real direction. I've explained this in detail over the last few weeks. Now, this creates what we call a liquidity sweep or manipulation. Now, once liquidity has been taken, then we look for structural shifts, and this will come in the form of a change of character or a break of structure. And then that's our signal that the momentum is shifting. From there, we prepare for the pullback, the area where the best trades occur. Now, as you can see here you have your market structure. You have that high point, you have the low point, you have that spike above and where it sweeps liquidity and then moves back down, after which you get a break, retest, and then there's your trade. Now, this even happens on the smallest of time frames. We can get this on a 1 minute chart, and it becomes easier the more we apply it. Now, once we see the signal, from there we prepare for that pullback, that retest. The area where the best trades occur. Now, we need to also understand that if we are using this as a scalp trader now, that breakout with the pullback scalping model, it becomes a lot easier for us to actually get into trades and do it more precisely and perfectly. Now, I think the easiest way would be for us to just look at a practical model. What do you think? And see how the scalping strategy with smart money concepts, which is the core strategy we are going to use today, but again, making it simple, powerful, and adaptable across all markets. Now, I hope you all have a pen and paper, because I need you to make notes, please. So, I'm gonna break down the pullback scalping model, and there are 5 steps in total that you need to follow. So, pen, paper, write down. Step 1, identify liquidity pools, support resistance areas. These are precious highs or lows where traders place stop losses most often, and institutions know this. We've discussed this in length, where they'll push price just beyond these levels, trigger those liquidity grab, and then move in the opposite direction. Step 2, wait for the liquidity sweep or price spike above or below that low or high. Then once it rejects sharply, this creates that initial trap that fuels our next move. Now, from here on forward, we move into step 3. Step 3 is where we get a confirmed break of structure or change of character. This confirmation that control has shifted from buyers to sellers or vice versa. Then we move over to step 4. Enter on the pullback. wait for the price to retest that structure breakout zone, and it can be a small order block or a fair value gap, and so there's a few things you can use here, but you enter in the direction of the new momentum, okay? And then we get to step 5. Set your stop loss just beyond the liquidity sweep. Keep your take profits modest. We're looking here at 1:1 or 1.5:1 because we're scalping. So it's about repetition, not greed. Now, let's have a look at an actual chart setup. Let me just give me a quick second here. I just want to see why I am so terribly zoomed in. There we go. That looks better. I can slightly zoom out. Perfect. Okay. So I am assuming that you can all see my chart. It's a chart of gold. I'm here on a 15-minute time frame at the moment. Can you all just confirm in the comment section for me that you can see this specific chart layout, please? I would really appreciate that. Just so that I know you all still there. That's kind of the entire reason for it. So just let me know if you can see it. Now, why am I starting on the 15-minute time frame? Because again, I'm just going to look for structure. Okay, now here we can see. Thank you so much. I appreciate it. Now, here you can see from where price structure is at the moment. There is definite liquidity pools in this specific area, hence why I placed my resistance there. And again, here, hence why I placed my support over there. Now, this is US market open. This is what I'm trading here. This was actually yesterday's setup on gold, US market open. And so just to make it relevant for all of you as well. So here you can see simple, 15-minute time frame, identify liquidity pools. And now from here, we drop down to a 5-minute time frame. So on the 5-minute time frame, again, now remember what we're going to wait. We're going to wait for that liquidity grab. Then we're going to wait for a break of the area. And then we are going to wait for the retest. Okay, so here we've got now this massive spike where it moved into that liquidity pool and already pulled back. So, okay. Then from here, you can see it moved in the opposite direction and broke through that actual support area. So that next liquidity pool that we had there. And there we can see break of structure. Perfect. So now what do? I'm waiting for the retest. Now you can do this in 2 ways. I normally like, if I'm scalp trading, to get the most precise entry points. Why? Because I'm scalp trading, so I have already really tight stop losses. I have really tight take profits, and in a scalp trade, every pip counts. So I normally like to place orders. Vishal, this works on US30 as well. We can definitely look at some examples at the end. I'm just going to work through some examples in the beginning quickly first. Okay. Now, here you can see that push lower, and for me, I normally then go and I place a limit order just at that specific point. So when that retest happens, I get that most ideal entry that I want. I place my stop loss above those higher spikes that we just saw a little bit earlier. And again, like I said, 1.5:1. Like I'm maxing it out here as a scalp trade. And there you can see next 2 candles after so from here, we had 2 5-minute candles, literally spiked up, triggered my entry at that specific zone on the retest. Now, if you didn't get the entry at that specific point, this would have been a valid entry still. So if you wanted to wait for the 5-minute candle close, you are welcome to do so. Like I said, for me, I normally just like placing those entries to get those retests there as well. Yes, Vishal, I am using Smart Money Concepts. This has been the last 5-week series that we have been giving. So if you want to catch up on the previous series as well, or previous sessions, feel free just to go head over to the YouTube channel and you'll be able to spot all of that there, okay? And then obviously from here, you can see trade played out quite nicely in roughly about half an hour. So couple of minutes, okay? Okay, that's actually a good question. So I've got a question here stating, Franco, when you identify key support and resistance zones like the ones you used on gold, what factors make you trust a zone more? Volume, numbers of touches, or time spent there? So if we go back to this one here. Now, for me, I trade US market open when I scalp trade. So this is me pre-session having a look at, if I'm going to look for a trade setup here now, going into the US session, where would my highest conviction for a scalp trade be? Now, if you have a look here in this area here at the back, there was, a lot of rejection here already. So there was a big liquidity grab here. So if this gets broken, my chances for a sell is better. Now, again, based on the resistance here, again, 1, 2, 3 touches. So there's multiple touches there. So taking all those factors that you already mentioned, actually, so well done on that, all into consideration. So it's not just one thing. There can be multiple things that build in an area that adds value for me. Now, again, having a look back here, yes, here we had that massive spike that took place from this level. But again, we could also see the last hour, 45 minutes prior to the US session starting, there was also a lot of consolidation that's taking place on this level as well. So clearly showing that this level has significance going into the US session. I hope that answers your question. If it doesn't, let me know. I'll try again. So for me, it's identifying levels that will give me the highest conviction trades on a low time frame going into my US trading session. So I hope that makes sense. I want to show one more example. So this one is on S&P, because again, you guys know this is my favorite index to trade. This was again going into US market open. You can see here we are around that 330 range. And again, just having a look at high points that we have consistently been getting rejection from, and as well those low points that are consistently just pushing the market. So, for almost a day and a half, the market was just trading here in this range. Again, now I'm on a 5-minute time frame, so I was actually scalp trading this one on a 1-minute time frame. But again, just doing some analysis on a 5-minute time frame, seeing where that general areas of consolidation is, identifying those support and resistance levels prior to the session, and then dropping to that 1-minute time frame. So, and again, actually finding something a little bit different on the on this one specifically, because I want to show you guys that as before I move into the next slide. So here you can see, it dipped into that actual liquidity pool and then started pulling back quite hard on the 5-minute time frame as well. So again, going into the 1-minute time frame, we still have two options here. So yes, we can get a break lower or we can get a break higher now because the fact that we dipped into the liquidity pool. So there are some buyers coming into the market. And then as well, we still have that secondary option for once the support is broken, we can then trade from there onwards. Now, take into consideration, especially when trading stocks and especially trading US stocks, I always have one eye on news just to see which way fundamental spikes will go. It's ingrained in my DNA. I can't not do it. I'm not saying you have to look at news. It's kind of one of the reasons why I do the daily market brief for all of you, so that you can have your news updates in 5 to 10 minutes without having to spend the amount of time that I do reading news. But for me, it's kind of just ingrained in who I am, is like I can't trade without knowing some of the fundamentals that are behind everything. Okay. But yeah, so what happened, obviously, there was a few retests that took place on this level, never really cleanly breaking out. And then it started pushing back up. And then around 4:15, we actually got this change of character. After the change of character, we got a dip back in and a big rejection, which in this essence then showed me, you know what, I can enter my scalp buy here, placing my stop loss below these spikes, and again then aiming for that 1 to 1.5 ROI on this specific trade, which you can see played out quite nicely. The only thing it didn't really do, it did give me some gray hairs at one point, because it went nicely into profit. I was like, okay. And it actually rejected that resistance, but it wasn't at my set take profit yet. So I was like, you know what? I'm okay with the trade. I'm going to sit this through. And it came all the way back, and I was at one point, I was kind of upset with myself. So again, my emotions kind of took control of me at some point here. And I was like, I should have gotten out of this trade. And I was like, you know what, Francho, this is why you have stop losses in place. So if you did make a mistake, stop loss will be triggered and it will be fine. But afterwards, it just went up and I'd obviously achieved profit. So yes, but now something else also happened. We actually broke that higher resistance later during the day as well. So after hitting that take profit, we actually got that break, which now goes back to that setup that we looked at earlier at gold, where you had your change of character, markets pushing higher, breaks through the liquidity pool. And so now what are we waiting for? We're waiting for the retest. Now, on this one, I was a little slow, so I didn't get my order placed, but because I hit profit, and like I said, it was a little bit later during the day. It was after 5. Market came back down, and I did see the rejection that took place and entered again. However, again, second trade for the day, so managed risk a little bit better and just went 1-to-1 on this one and played out, before around 6:30. So again, two very nice, easy, simple, straightforward setups. But again, just using everything that we have covered over the last 4-5 weeks that we have been discussing price action and market structure and smart money concepts and how to use it. But in a lot of the other examples that I've given over the last couple of weeks, we were more talking about day trading, also some longer term setups. And tonight I just kind of wanted to focus on, the bit more fun side of trading and having a look at those shorter term scalp trades, those short, easy movements in the market. And also Bridget was kind of playing in the back of my head because of the fact that she just always tells me in every single session, I trade short term, I trade scalp trading. And after a while, I just started feeling bad. So I was like, you know what? I have to give a session on scalp trading, and I have to show how we can use these concepts that we've been discussing over the last 5 weeks in that shorter term and easier to use function using scalp trading and going from there on forward. Okay. If you have questions for me, let me know. Let me see if I can answer them. Otherwise, I'm going to move on. Next part is obviously now we've seen how to enter the trade, how to identify the setups, how to use the strategy. So now I kind of want to discuss trade management a little bit more in detail. So this is where your discipline gets tested. Now, this kind of goes into what I said earlier as well, with that one position that kind of tested my discipline at one point, because the fact that as scalpers we often fail not because of bad entries, but because of bad exits. So because markets move so fast when you scalp that your emotions definitely get the better of you, and then you get out of trades when you are not supposed to. You get into them at the right time, but when your emotions and your fear grips you, you know, it can lead to closing trades when you're not supposed to. So if your stop loss is hit, accept it and move on. And we are scalping, so we're not taking big risk on scalp trades as well. So, you know, a small loss is cost of doing business. I always look at it as operating expenses. So, but on the other hand, if you move your stop loss or your stop level, you know, due to fear or greed, you've broken your code. You've broken the scalper's code. And that will cost you far more over time. And similarly, when you hit target, close your trade. When we get to take profit levels, close your trade. Don't hold. I've seen traders do this so many times, where they get to that level that they identified as, this is my take profit. And then the market gets there and they're like, nope, I'm just going to hold it a little bit more, hoping for more. Traders, when we scalp trade, fast markets rewards decisiveness, not hesitation. It's not about, you know, seeing how far we can push it. It's seeing to get into the position, hitting targets, looking for new position, hitting target, looking for new position, hitting target, and just consistently repeating that over and over again. Now, so please make note of these specific rules as well that, you know, we've covered. Now, on each one of your entries and exits, please wait for confirmation. Don't guess. I showed 3 very nice examples of how to apply the trading strategy. Every single time, waiting for confirmation, never guessing. We enter on the pullback, not during the chaos. And we use predetermined stop losses and take profits. And we predetermine these stop losses and take profits before we enter into the trade, not after. And then, you know, obviously manage your trade from there on forward. Now, very importantly, when we are managing our risk and so forth, you know, scalping magnifies both our strengths and weaknesses. And that's why risk management is our foundation when we are scalp trading. As a scalp trader, I would say to never risk more than 0.5 to 1% of your account. If you're risking 1% of your account, it gives you 100 trades. Okay, so as a scalp trader, you need room because there's a lot of trades that you'll be entering. So 0.5 to 1% of your account per position, and then, you know, not more than 3 to 5% of your account per day. We need to set a daily loss limit. This is very important. And when you hit that daily loss limit, stop trading. Okay, it's that simple. You protect your capital by protecting your mental clarity. Remember, trading isn't how much you can make. It's about how much you can keep. I've seen so many traders who are great at making money, but they're also fantastic at giving it back to the market. So trading is not just about how much you can make, it's about how much you can keep. Preserve your capital today so you can trade again tomorrow. I don't know if you've ever tried this, but trading without capital is very difficult. So, preserve it. Question. Because you guys are very quiet today. I don't know why. I don't know what I did to all of you tonight, but yeah, I'm not getting I'm not getting the normal interaction from you guys. Like, what happened? Is it because we're getting to the end of the year, so now you're all just gone quiet? But as a question, to all of you here tonight, do you have a maximum daily loss limit or a rule for when to stop trading? Just let me know, yes or no. And if you want to share the rule to when to stop trading, I would love to hear that as well. So share that. So maybe just pop in a yes or a no. And then if you have a specific rule as to when you stop trading, for the day, let me know. I would love to hear it. Now, we are starting to get to the end of the session. So, a few more points that I want to cover before we end off. And I now want to move over and talk about the battlefield inside our mind. Who, in essence, is the true opponent in trading, not really the market. It's our own emotions. Every price fluctuation triggers a psychological reaction, and this psychological reaction can be either fear, greed, or doubt. Now, a professional scalper recognizes these emotions, but so it's not that you are void of these emotions. We recognize these emotions, but as a scalp trader, as a professional scalp trader, you don't obey them. You follow your system, not your feelings. So when you're in a trade and your heart rate spikes, remember your code. When you want to revenge trade, remember your limits. Your emotional control as a scalper is your edge. Lose it and you lose your edge. Like I said when we started with Smart Money Concepts as well, this is basic price action. This is a strategy that hundreds of thousands of traders across the world uses. But some make money, some don't. So where's that edge? Where's the differentiator? The differentiator is, are you able to control your emotions? Now, there are some things you can do to assist in controlling these emotions, and one of them is building a routine. Now, routine breeds consistency. So every successful scalp trader that I've ever met in my life follows a structured pre-market process, and I'm including myself in this. So before I start trading, I told you in the beginning, I review economic news, okay? It's part of who I am. I can't not do it. And then we mark our liquidity zones and we visualize potential setups. And I'm going to repeat that because I don't think everyone always gets how important that is. When you identify your zones, when you identify the area where you are going to start looking for setups going into the market, visualize what a trade would look like. Visualize what you are looking for. Not, okay, I'm going to wait for the market to tell me what to do. No. Okay? Have a look. Here's support. If I break here and we get a break of structure, I'm going to wait for a retest here. That's where I'm going to enter. Or it's going to come down to the support. It's going to bounce. We're going to see that liquidity grab. I'm going to wait for the change of character. I'm going to wait for the retest. And that's where I'm going to enter. Now, visualize what that setup needs to look like. So that you know what you are looking for so that when you see it, you can react better. I hope that makes sense. Let me go back to the slide. Now, so this is obviously before your session. Now, during your session, you need to stay focused, avoid over trading, and follow your checklist. As a scalp trader, I have emphasized this so many times where, we need to remove all distractions so that we can focus on getting that precise entry that you are looking for. Then, after your session, this is normally the hard part, is after the session. Because now you need to journal your trades, record the numbers. But not only the numbers. I also want you to start recording your emotions. What triggers you? What distracts you? What improved your focus? These are things that you need to start dotting down. This type of feedback is what separates professional traders from casual ones. It's that ability to reflect that builds refinement. Okay, if you can start identifying what emotional triggers you had and what you need to work on and how you can work on that and what potential distractions that you have and how you can avoid that, that's what builds you then as a trader so that you can better manage your trades. Now, question time. I want to know, how many of you actually currently journal your trades? And if you do, what insights has your trading journal given you? Let me know. Okay, so how many of you here tonight actually journal your trades? And if you do journal your trades, what insight has that given you? So, I want to share a bit of a checklist with all of you. Okay? So, before you enter a trade, so make notes of this checklist and, just tick things off, even if you just do it mentally. After a while, you'll know it. But before you enter a trade, ask yourself, is there clear liquidity above or below recent structure? Has liquidity been swept? Yes or no? Do I see a structural shift? And this will be a break of structure or a change of character. Has price returned to that key level or fair value gap for an entry? Did we get a retest? And then lastly, is my stop and target predefined before I enter? And here's the beautiful part to all of this. If the answer isn't a confident yes to all 5 these things, don't trade. It's that simple. Don't trade. Discipline means saying no more often than you say yes. And I know for a lot of traders, these are very, very hard words to hear. But as a scalp trader, this is of utmost importance. Now, some of the most common mistakes that scalp traders make is number 1 on the list, over trading, chasing losses, or trading during low liquidity sessions. Remember, you're a scalp trader. Asian session isn't really for you. Okay? UK session gets better, US session is brilliant. So, never enter without structure and never trade from emotion. Try and avoid these specific mistakes that could occur over and over again. Remember, even the best setups fail sometimes. This is something we need to accept. Success comes from success doesn't come from avoiding losses, but from managing them wisely. Now, as a scalper, your edge lies in your execution. The market will always tempt you, try and distract you and test you. But your process, this is your power. It keeps you consistent when others panic. You don't need hundreds of trading strategies or thousands of indicators. You just need to understand clean price action and just execute the strategy that you have flawlessly. Repetition with discipline transforms average traders into professionals. So remember that, and I'm going to say it again. Repetition with discipline transforms average traders into professionals. So during tonight's session, we've covered what it means to live by the Scalper's Code, the mastering of precision, discipline, and emotional control. And we again looked and learned how to identify liquidity, spot structural shifts, and then use the breakout and pullback model, if I can pull in such a way, for high probability scalp trades. Now, each and every one of you, your next step is now practice. Start small, focus on execution, refine your process daily, and remember, consistency is not built in a day, but it can be destroyed in one emotional moment. That kind of hurts. So protect your discipline. Let me see what comments have I gotten. I've read all those. The trade journal helped me to identify emotional and other triggers that were previously unknown. Okay, cool. Roadcast, welcome. Haven't really heard much from you tonight. Thank you so much. This was once again very informative and great learning experience. I, funny enough, had been watching videos about the scalping strategy today. Beautiful. And yes, I recently started with journaling my entries. Love it. Absolutely love it. So, traders, shucks, it's almost been an hour. Thank you for everyone who attended. Thank you for being here. I do hope that you found value in this session. If you're watching the recording, please leave me comments. I will respond. So, I'm going to leave you with one final note. Remember, fast markets reward discipline, not the daring. So, with that being said, stay sharp, stay focused, trade smart, and keep learning. I'll see you in the next session. I'm also having a live trading or live analysis session, so live market brief tomorrow morning. So come and join me for that, where we will have a look at various markets. Maybe we'll look at some scalp trade setups during the UK session as well. So yeah, feel free to come and join me for that tomorrow morning. See you all there. Have a blessed evening further. Thank you very much. Bye-bye.